In a rapidly changing global landscape, economic shifts and significant geopolitical tensions have made headlines. From the Federal Reserve's outlook on inflation to new developments in the energy market, the world is watching closely. Here are today's top 10 stories you need to know. Federal Reserve Bank of New York President John Williams recently shared his insights on inflation and monetary policy. During a recent interview, he expressed a more optimistic view on inflation due to declining energy prices. This shift in perspective marks a potential change in the economic climate. However, Williams refrained from indicating any immediate changes to the Fed's monetary policy. He emphasized that the current stance is well positioned to meet the goals of maximum employment and price stability. The Fed's next actions will be closely scrutinized, especially as economic data continues to emerge. Investors and policymakers alike are keen to see how these insights may shape future interest rate decisions. With inflationary pressures easing, the Fed's next moves could have significant implications for both the economy and the markets. As we navigate this uncertain economic environment, all eyes will be on the Federal Reserve's upcoming policy meetings. The Reserve Bank of New Zealand is expected to maintain its official cash rate at 2.25% during its upcoming policy meeting. According to Westpac, a significant factor in this decision is the recent decline in oil prices. This easing of inflationary pressures allows the bank to observe economic performance more closely before making any adjustments. The central bank aims to ensure that it has a comprehensive understanding of the economic landscape before committing to any changes. Economists believe that the upcoming data releases will play a crucial role in shaping the bank's future policies. The Reserve Bank's cautious approach reflects the global economic uncertainties that many countries are currently facing. As New Zealand navigates these challenges, the implications of its monetary policy decisions will be felt both domestically and internationally. Stakeholders will be monitoring the situation closely for signs of future adjustments. Today's stock market saw notable fluctuations, reflecting a mix of optimism and caution among investors. The S&P 500 and Nasdaq indices experienced significant movements, particularly driven by technology stocks. Recent corporate earnings reports revealed surprises that buoyed some companies, while others struggled under the weight of economic uncertainties. This mixed performance illustrates the ongoing volatility in the market as inflation concerns and interest rate changes loom large. Analysts emphasize that these trends could foreshadow broader shifts in investor sentiment and market direction. The interplay between economic data, such as employment rates and consumer spending, alongside corporate earnings, will be pivotal in shaping future market movements. As investors navigate this complex landscape, strategic decisions will be critical for effective portfolio management. Looking ahead, the upcoming economic reports and earnings announcements will likely provide further insights into market stability and investor confidence, influencing trading strategies in the near term. The Greenbrier companies recently reported its fiscal third-quarter earnings, revealing a mixed performance that has raised concerns among investors. While the company surpassed earnings expectations, with earnings per share at 60 cents, this figure marks a significant decline compared to the previous year. The drop is largely attributed to a 32% decrease in net sales within the manufacturing segment, a critical area for the company. Furthermore, the leasing and fleet management segment experienced a 26.5% decline in net sales year over year, highlighting broader challenges in the railcar market. Analysts are now closely scrutinizing these results to assess the implications for Greenbrier's strategic direction moving forward. The company has adjusted its guidance, reflecting a more cautious outlook amid ongoing market volatility. Investors are particularly focused on how Greenbrier will adapt to these challenges and whether it can stabilize its financial performance. As the company navigates this turbulent landscape, future quarters will be pivotal in determining its recovery trajectory and overall market position. In a groundbreaking move, SpaceX has distributed shares to 2 million children, marking a significant milestone in corporate equity accessibility. This initiative aims to educate young investors about the stock market and encourage financial literacy from an early age. By engaging a demographic often overlooked in traditional investment strategies, SpaceX is not only democratizing ownership, but also instilling a sense of financial responsibility. Historically, access to stock markets has been limited, often favoring wealthier individuals. This distribution aligns with a growing trend among corporations to promote financial education. The impact of this initiative could be profound, as it might inspire other companies to adopt similar strategies, fostering a culture of investment among youth. Moreover, as children learn about equity, they may become more financially savvy adults, positively influencing future economic landscapes. As this initiative unfolds, it has the potential to reshape how companies engage with younger generations, paving the way for a more inclusive financial ecosystem. The recent decline in energy prices has led to a complex array of reactions across global markets. This downturn, attributed to increased supply and weakening demand, is seen by analysts as a potential turning point in the inflation narrative. Lower energy costs could alleviate financial burdens on consumers, resulting in increased disposable income and spending. Furthermore, businesses reliant on energy inputs may experience reduced operational costs, enhancing profitability. However, the persistent uncertainty regarding future energy supply, exacerbated by geopolitical tensions and climate policies, continues to raise concerns among investors. The fluctuations in energy prices are particularly impactful for sectors such as manufacturing and transportation, where profit margins are heavily influenced by energy costs. As companies report their earnings in the coming weeks, market analysts will scrutinize how sustained changes in energy prices will influence inflation rates and overall economic growth. With the potential for these shifts to reshape economic strategies, stakeholders are keenly focused on upcoming policy discussions that may further impact energy markets and consumer behavior. Recent news in the corporate world highlights significant mergers and acquisitions, particularly within the technology sector. Major players like TechCorp and Innovatech have announced plans to merge, aiming to create a powerhouse capable of competing with global giants. This trend reflects a broader strategy among companies seeking to enhance their market positions and expand their technological capabilities. As firms pursue these strategic partnerships, the implications for competition and innovation become increasingly profound. Analysts are evaluating how these consolidations will reshape industry landscapes, with a particular focus on consumer choices and pricing. With technology firms at the forefront of this trend, attention is directed toward advancements in artificial intelligence, data processing, and cloud computing that these mergers may catalyze. However, stakeholders are also concerned about potential regulatory responses, as antitrust issues could arise. In the coming months, the effects of these corporate strategies will be closely scrutinized, as they may redefine competitive dynamics and innovation trajectories in the tech industry, setting a precedent for future mergers and acquisitions. Today's economic landscape is characterized by significant shifts that are impacting global markets. Rising inflation rates, which have reached levels not seen in decades, are forcing central banks to increase interest rates in a bid to stabilize their economies. This has led to higher borrowing costs for consumers and businesses alike, reshaping financial strategies worldwide. Additionally, geopolitical tensions, particularly in Eastern Europe and the Asia-Pacific region, are exacerbating supply chain disruptions and creating uncertainty in trade relations. Companies are adapting by seeking innovative solutions, such as diversifying supply chains and investing in technology to improve efficiency. Analysts are closely monitoring these dynamics, as the interplay between inflation, interest rates, and geopolitical factors could lead to a recession in some economies. The balance between growth and stability remains delicate, with policymakers striving to implement measures that promote economic resilience. As stakeholders navigate this rapidly evolving environment, the coming weeks will be critical in determining whether these global economic shifts will lead to sustainable recovery or further turmoil. Investors should prepare for potential volatility as new data emerges and global events unfold. Escalating geopolitical tensions have captured global attention, particularly in regions such as Eastern Europe, the South China Sea, and the Middle East. These areas are embroiled in conflicts driven by historical grievances, territorial disputes, and competition for resources. The ongoing war in Ukraine, for instance, has not only strained Russia's relations with the West, but has also disrupted global energy supplies and food security, raising prices worldwide. Analysts caution that these tensions could lead to a significant realignment in international relations as nations reconsider their alliances and trade partnerships. The potential for military escalation remains a pressing concern, especially with recent military exercises and aggressive posturing from various states. This situation underscores the necessity for effective diplomatic channels to alleviate rising risks and foster dialogue. The role of international organizations, such as the United Nations and NATO, is becoming increasingly critical in mediating these conflicts and promoting peaceful resolutions. As nations grapple with these complex dynamics, the impact on global economic stability and security is profound. In the coming weeks, the focus will shift to high-stakes diplomatic negotiations, which will be pivotal in determining whether tensions can be eased or if further escalation is inevitable. The stakes have never been higher for global stability. A potential global economic crisis is looming as inflation rates continue to rise, prompting concerns among economists and policymakers worldwide. Over the past year, inflation has surged to levels not seen in decades, driven by supply chain disruptions, rising energy prices, and increased consumer demand post-pandemic. The increasing costs of living and rising interest rates are squeezing consumers and businesses alike, leading to fears of a recession. Major economies, including the United States and the European Union, are struggling to maintain growth amidst these challenges, with GDP growth forecasts being revised downward. Central banks are under pressure to take decisive action to curb inflation while supporting economic recovery, but their tools are limited. Recent data indicates that manufacturing sectors are experiencing slowdowns, which could exacerbate the situation and lead to job losses. Investors are becoming more cautious, leading to volatility in stock markets, which further undermines consumer confidence. The interconnectedness of global economies means that a downturn in one region can have ripple effects worldwide, potentially destabilizing emerging markets. As leaders grapple with these issues, the urgency for coordinated responses becomes paramount. The next few months will be critical in determining whether we can avert a full-blown crisis or if the global economy will enter a period of significant decline, necessitating innovative policy measures and international collaboration. Thank you for watching today's news roundup. Which story shocked you the most? Don't forget to like and subscribe for more updates.